We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jon Little, publisher of the Pickaxe. Thanks for joining me today, Jon.
Hey, it's great to be with you. Good to talk to you, Tom.
So we had a little bit of a technical issue, so we won't have video for this interview, but we do have some charts that we'll put in later. But, coming across your website, you have many interesting articles. So why don't we start with what you called precious metals warfare theory and a bit about the history of money, starting with how a gold standard works and how it progressed from there.
Yeah, there's a lot of theories on money. And where I differ is beginning with the first coin that was minted in around 600 BC in the Western Turkey region. And it came into use in the Peloponnesian War, which was Athens versus Sparta. And one thing unique about that area is there was an area called the Delian League, and the silver bank had been moved to Athens. So there was already a lot of silver that was in that area, as well as what are called the mines of Lorien, where they found 700 mine shafts. So silver was already, there was a surplus of silver in the forms of vases, plates, sculptures, statues, fountains, a bunch of antiquities, but wasn't used as money at that time. And precious metals warfare theory that I'm advancing is that since there was a surplus of silver, not only from the Delian League and all these mines, and the labor came from children as well as slaves, and we'll get into how war always results in grabbing resources. You're looking for spices, you're looking for gold and silver or bronze or grains or tin, and when you win, you get the loot from the resources as well as you get the slaves. So silver was monetized. Think of it as sort of an up lever, or you're leveraging up using silver to pay soldiers. And it makes perfect sense if you think about it. You would have up to 100,000 people on the ground. That was your ground game, basically, to defend the castle walls surrounding Athens. And then you needed to have a sea vertical as well. And sea was to basically intercept the trade routes. So by giving the soldiers the silver, if you didn't, you would need another, let's say you have 100,000 people out on the ground, you would need another 100,000 people to feed them or to bring their swords, their armor, their helmets. And it became their walking around money for their wine, the women, the song. And it's my theory based on the fact that there was this surplus of silver, that this is what gave silver its value, is because your empire is based on warfare. It is the economic development plan. It's basically, I saw, I conquered, or kill or be killed, or, conquer or be conquered. And markets then emerged in this context as merchants went to outfit the soldiers with their food, with their equipment. Then government gets in the game and taxes go back to the state. And that's sort of the circle. But it only works if you have another war. You got to keep that circle going forward with a war of some kind, taxes, looting, and then you have to keep conquering others. And the only reason that differs from other theories of money is the other theories of money were that coins were minted to replace barter, because barter had been considered cumbersome. And in old economic books, you always talk about the double coincidence of wants, where, Farmer Joe may have a cow and then Mrs. Anthony may have 20 chickens. And then they barter or haggle over, is the cow worth 20 chickens, 30 chickens, 40 chickens? What if I don't want chicken? Do I have to slice up this cow? Mm-hmm. And there's really just not that much evidence in history that the coins were used in that context, because most of the coins are found wherever the soldiers are parked. And this is true for the Peloponnesian War. It was supposed to be only a 3-year war. It went on for 30, as well as the Roman Empire. And yes, later, the markets emerge as they are outfitting the soldiers. And I'll show you the slides on how the Greek market worked and how it became very bureaucratic, where the regulators had to show up to make sure there was quality of goods, and that basically that the government got their cut from these coins. So yes, it was a tool for trade, money in the form of silver. All I'm saying is that it did not originate that way, because there was a surplus of silver. What was more valuable is to lever up by paying the soldiers in it. And then it had this risk and romantic sort of lore that went along with the silver. Is, think of, soldiers tell stories about their battles. So there was some intrigue about the silver, whereas before, silver was just sort of like, oh, that's that thing that's beautiful, that makes, beautiful sculptures and statues. Mm-hmm. Now, what was your second half of the question? I got into the origin of silver, but you wanted to pivot to now modern time money, or what was it?
Well, what I appreciate about your work is that you take a real historical lens and, a longer term view of how these currencies and empires progress. So, talk to us a little bit about how kind of the eventuality of, as that empire grows, what are some of the signs of the abuse of its money and where and how it starts to spend it?
One way I could answer that question is, if you were ever to Google, the original unit in Athens was the drachma. And I have a calculator where you can see I believe it's like 0.153 ounces. And the original unit in Rome was the denarii, which we get the word dinero from. And the best way to think about it is, these emperors know they need soldiers. There was a Roman emperor, and his father had preceded him and said, make sure the soldiers are always on your side. You need to fear them, but take care of them and ignore everyone else. And what we see over the time in Athens as well as in Rome, and if you Google just the denarii, you'll see over every 10 years as they advanced the soldiers' pay, you'll also see where they also diluted the strength of the silver. And it's just, you see it almost like you see the M2 money supply increase since we went off the gold window in 71, that same curve that goes up and to the right. The same thing happens with the debasement of silver, where they start introducing copper, brass, mostly copper to the currency. And what happens is it creates the same inflation that we're seeing today, where people don't trust the new coins and they start hoarding the old ones. And that's really what leads to a lot of the inflation of the time.
Mm-hmm. But kind of going back to you brought up a point earlier about having to have war basically to keep this perpetual cycle of money kind of flowing. Is that more of a symptom of a way that the government starts to spend its money, and then because of that, does it have to start debasing the currency that it had originally had to respect?
Yeah, I would say that if your thesis is, and based on every civilization that I've studied, starting with the Greco-Roman, moving through the Four Crusades, the European wars with monarchs, imperialism, neo-colonialism, or colonialism first, that yes, the cycle is war, expand, grab the resources, like you would see with Cortez and Pizarro, for instance, in Mexico and Peru, respectively. I mean, if you take the situation in Peru, they only had less than 200 men. And when the ransom was paid with the leader of Inca, He paid for it with the room he was held in was filled with gold, and the two adjacent rooms with silver. And the value was 24 tons, I believe, which is more than Finland has vaulted, or most countries have vaulted. And they did that, in a weekend. And yes, the theory would be then, as government spends more, the problem with building a bunch of weapons is they don't have much of a return on investment. Like if you look at all the defense spending, and I'll show you a chart where U.S. spends more on defense than the next 11 countries combined, there's not much technology transfer to the private sector. I think we got Velcro out of it. And that's most of the B-2 bombers hang out in a hangar near Alamogordo. And that's a huge burden on the economy. It's roughly half of the tax burden in the United States. And that's always been the case with the precious metals warfare theory, is that the Europeans had to fund the explorers. They had to go on their conquests. They needed slaves to mine more gold. And you never rest. If you look at the way Africa was carved up and the way Latin America was carved up, there was very few nations involved in this colonialism. And likewise, we see today with the expansion of the IMF, most countries in the third world were parceled out, like Honduras, you must be the banana exporter of the world. Cuba was the sugar exporter of the world. Peru is now the copper exporter of the world. And it's basically turning these, and the problem is where only 3 or 4% of the population or less own 95% of the arable land for export.
Mm-hmm. So we've always heard that every fiat currency has failed throughout time, yet countries keep going away from a constrained monetary system. So is it possible that a country can't really expand while on a gold-backed standard?
No. I think we're seeing right now a perfect example it was so odd that when Russia did move in on Ukraine, and most academic people believe it's because, like Dr. Mearsheimer out of University of Chicago, it's because the West pushed towards Ukraine's border. It was the expansion of NATO. I mean, Putin had to swallow the fact that Poland and a lot of the other Eastern Bloc countries were joining NATO. But when you pushed into Ukraine right on their border, he's like, that's not going to happen. Just like a U.S. president would say about Mexico, that's not going to happen. In fact, when it did happen in Cuba, that was the Cuban Missile Crisis. And so we've always had what's called the Monroe Doctrine on this side that said, you cannot come into our hemisphere, yet we're moving that way. So Ukraine, so we decided to sanction, and when I say we, I mean the West, sanction Putin. And Putin then, the unintended consequence is, yes, it crashes the ruble for like 3 weeks. And then it's almost like who advised our foreign policy department, knowing that Russia was this commodity superstore of palladium, nickel, coal, natural gas, oil, wheat. So now you have this alliance it just pushed Russia into China's arms. And they are, you had some guests on recently that talked about pegging, I think it was 5,000 grams of gold to the ruble. Mm-hmm. And now, and this has done wonderful things for the price of gold. And I believe that's the playbook of Brazil, Russia, India, China, South Africa, and even these countries that are on the fence, such as Saudi Arabia, they're all breaking towards the east now, because every reserve currency expires, just like Dutch did. It fell to the British pound. The British pound fell to the U.S. dollar. And the only reason the dollar got a breath of life after the gold window closed was because Kissinger met with Saudi Arabia and basically said, we'll protect you if you settle your oil OPEC transactions in the US dollar. That hints the petrodollar, but that's almost like a prison arrangement or a mafia arrangement, is we will give you protection if you listen, if you do what I say. Mm-hmm. And that goes back to my premise that so I don't think there's anything incongruent about a gold standard and expanding your influence. In fact, it's helped Russia, because if you're sitting on the sideline, you're an emerging market like India. Are you going to go with the currency like the US dollar that's tethered to $30 trillion debt plus $165 trillion unfunded liabilities? And no one talks about the other problems with the US economy. Recently, I read that Microsoft spent $68 billion for Activision Blizzard, which made like Candy Crush. I mean, that's an insane amount of money for a video game. So it's not just U.S. fiscal irresponsibility, it's also corporate irresponsibility. So if you're India and you're seeing that, would you go with the commodity superstore or the overvalued Silicon Valley / M2 money supply party, which has been just drugs for Wall Street gamblers?
Mm-hmm. So do you think the example of the sanctions that the West has put on Russia because of the conflict in the Ukraine is kind of in a way an example of waning power that the U.S. has over the world?
It's a perfect example of waning power. Because we're interconnected through the internet, everyone can look up the fact that really the NASDAQ and the S&P 500, with the exception of a basket of stocks like Microsoft, Tesla, and Amazon, for example, the rest of the market is dropping like a rock. Meanwhile, the CPI says we're at 7.9, but it doesn't count food and energy, which we know that with the cost of fertilizer being 10 times what it was 2 years ago, that this inflation is with us for a good 2 to 3 years more. In fact, I don't see there's any way out of it except for some monetary reset. So it's pretty easy for people to keep the score and see that we're printing, Russia's not printing. We have enormous debt, Russia doesn't have debt. We have an unproductive labor force right now because we've outsourced everything to India, China, and Southern Asia. People in the U.S. are basically just delivering pizzas to one another through some app or distracted. When Rome had problems, they had to distract the people with these crazy Colosseum games or filling up this stadium to do these naval sea reenactments. And here we are just obsessed with, is Taylor Swift got a new boyfriend or what's Justin Bieber doing? And it is Colosseum games, the obsession with sports, and we all like to be entertained, but we can't just stream our way on Netflix, Hulu, and Amazon and get our way out of this problem. And that's the new bread and circuses of the U.S. citizen.
Mm-hmm. So do you think that there would be an advantage to be the first country to go back to a gold standard of some sort?
I don't think it'll happen here in the United States because...
Well, not necessarily the U.S., but just anywhere in the...
Oh, you're talking about on the global stage?
Yeah.
Yeah, it's a big advantage because when we look at... I think that's been the marketing plan for Russia, is to say, we have money backed by... The ruble's backed by gold. Through proxy. It's a de facto situation, but that's still better than in the US. No one talks about gold, but I can look at my computer and there'll be 50 stories on crypto, but not one on gold, except for that it's going to zero. But whereas you got Putin in Russia, who encourages his citizens to buy gold, same with China, same with India, they've been buying silver big time in the last quarter. It's off the charts. So you have these people that have been stung by hard times understand that precious metals have always been money for over, since 600 BC, and some argue before that. So yes, that's a huge advantage. I think Powell was quoted recently as saying that there can be two reserve currencies. And I'm sure when he said that, there were a few people in the banking community that probably their next call was probably to the Federal Reserve and said, let's not borrow a problem like that. But yes, it's an advantage to peg the ruble to gold and to oil. And I think the playbook will be out on coal because, it's just almost impossible to pivot to the green energy initiative. It takes too much of a mining effort. I think a bus, an electric vehicle bus or an electric vehicle truck takes 800 pounds of copper. So how are you going to get the copper out of the ground? You're going to need a lot of diesel. Mm-hmm. Same thing with bringing the wind farms that are on the ocean. For every quarter mile of cable to bring it to the power grid, you got a lot of copper, and so the infrastructure has not been thought out, and that's why coal stocks are doing well, like Peabody. And we're seeing the fact that just the basics, and that's sort of what led me down the path of looking at the trade patterns in Athens and during the Axle Age, was that they had a just-in-time economy also. They needed the tin coming out of Afghanistan to mix with the copper so they could, because bronze is an alloy of 88% copper to, I think, 12% tin, because these soldiers needed helmets and chest plates and swords, and the farmers, they were coming out of the Stone Age, so you need an improved plow, an improved hoe, improved axe. Those are all made by bronze. So that basically there was interdependent, and you needed lumber to make your coal to smelt to get to your copper and bronze. So it was a just-in-time economy. You needed, even though I said earlier that Athens was flush with silver, they didn't have grains. They had to get their grains from the east of them. So that's why these trade routes were very important. And it's similar to today where we talk about the supply chain issues. And with Russia having the commodity superstore and having a love for gold. Now, I will tell everyone, and you'll see in the new article, that a lot of the gold they've been able to get is sort of, they do have mines and they have saved, but they do get a lot from Sudan. Is up to 30 tons a year were flying in through planes because Putin was able to install sort of a tin pot dictator, and this nefarious leader owns the gold mines in Sudan while the people are basically in poverty. And that's a playbook of colonialism, is to find your friendly dictator, make sure he's friendly to your political needs, and then meanwhile there's severe poverty in the colonial state. So the oppressor's playbook, go ahead.
As we're thinking about, all of these, in a way, the global commerce system here, as you were putting it, having countries exchange whatever goods that they have, because one's better at producing, let's say, wheat than the other one is at producing copper. So it's always good to be able to exchange. Do you think that there's a significance of the countries of the world that have imposed sanctions on Russia versus the ones that haven't?
Yeah, a pattern I'm seeing is primarily the people that are imposing the sanctions, United States, Europe, Australia, Japan. With the exception of the United States, they are reliant on the resources from the global South. And the people that have sat out in the game of, am I going to take sides in this war, is all of South America, all of Central America, Mexico, all of Africa, India, Saudi Arabia. And I would say that Israel's silence is deafening, because how long have we heard that Israel is this of the utmost strategic importance in a geopolitical context and for the United States, but they're not taking sides. Mm-hmm. It doesn't, they know that, yes, the U.S. has the advantage when it comes to perhaps having the strongest military we've ever seen. And you have to see that the U.S. became way too distracted and perseverated and focused on Middle Eastern terrorism. They've been taking their eye off the ball by being obsessed with trying to find a terror cell, or try to fight ISIS, and not thinking about the fact that really, I think the data, and it comes from Stephen St. Angelo, actually listening to your broadcast, that we consume 4 to 5 barrels of oil for every barrel of oil that we produce. So that's why you'll see that the U.S. in the West is at a severe disadvantage, because when you just look at the price of palladium now, look at the price of fertilizer now, look at the price of aluminum, where if we're going to do this pivot to Teslas and electric vehicles, it's basically predicated on having lightweight materials, which is aluminum. Same with the aerospace industry. Well, Russia's the leader in aluminum. They're the leader in nickel. Catalytic converters are made with palladium. Europe needs, Germany, I think, uses 40% of their energy need comes from Russia. It just was not well thought out. When the sanctions went down, I believe it was thought that, you've crashed their stock market. You've gone after some yachts. They can't buy Gucci in Italy anymore. But the long game is way in favor of Russia and China and weighted against the West. Mm-hmm. And I don't think I'm the only one that thinks this. I mean, it was a miracle when you had Luke Grauman on and maybe 2 weeks before the war, and he talked about the playbook in his head. And at the time when he was saying that, he said it this way: this is what I would do if I were Russia. And you massage that question out of him with a lot of skill, because as it turns out, that aged very well, and it's exactly what they did. And I think he was just thinking, as an economist would, that you always have to look at raw materials and supply and demand issues, the Austrian School of Economics playbook. Mm-hmm. I mean, modern monetary theory is not working. Keynesian economics, I would say, is also blowing up right now.
Well, I think we'll see how that ends yet. And in a way, we kind of have to take the perspective that we are living through history, right?
Right. And no one's saying that war is good. All I'm saying is that war is the ancient playbook. We'd have to look deep within ourselves to figure out why it is easier to steal something than work for it. But it's been the playbook that history has moved in because of war.
Mm-hmm. Well, taking your historical lens again, when we think about the idea of manipulating the price of gold and silver, you took a deep dive looking back at how this has played out through history. So what did you find when you looked at let's say, the history of manipulation?
Yeah, that's a good question. I found evidence that it started in 12th century Europe, and it was in Seville, Spain. And there was a leader, I forgot his name, Enrico Dandolo, I believe. And the goal was to help the Crusaders seize Constantinople. And basically, to finance this war, the invention of war bonds were invented. And the bankers vaulted the gold and silver, but said that there was going to be a mandatory loan on the tax-paying citizen. And it promised the citizens 5% annual interest. But the problem was no one really knew what the outcome of this war was going to be. And skepticism emerged, and whether these war bonds would ever be repaid. And this led to the fact that they had to sell at a big discount. And they called them bonds in the English scheme. And if it were in France, they did the same thing. They called them rente. And in Spain, they called them the juros. And the townsfolk and villagers who were once independent are now pretty much hammered into the ground and reduced to being wage laborers. And we see this playbook again in Holland. And also the emergence of their stock market was based on leveraging paper transactions for what the future of India's conquest would be. And the Bank of England is the best example, where King William III needed money to fight France. So 40 businessmen got together, loaned King William III $1.2 million to help finance a war against France. But in turn, they had the leverage on the king. They said, let us form a corporation with a monopoly on the issuance of these banknotes. And then we could see that forever and ever, you could endlessly duplicate and multiply gold and silver through these paper bonds. And they infected the population. And the same thing happens over and over. Social unrest happens every time there's inflation. Some people have metrics like it takes 40% of the nation to be hungry before they hit to the streets. But every revolution is based on, I think people will tolerate the paper currency while it's A-okay, and then there's stories spun around of, I mean, even recently you'll hear that inflation's because at first it was transitory, then it was supply chains. Now you're hearing it's greedy corporations, but it's the same playbook. It's basically the endless swapping of paper being shoved down the throat of the working class.
Mm-hmm. Well, you mentioned interest rates there, Jon. What function do negative interest rates have, as this seems like a very counterintuitive idea to, as Rick Rule puts, the idea of return-free risk in a way?
Yeah, I don't know why anyone would buy a bond, a T-bond right now, knowing that it's going to guarantee you a loss of now 7%. Mm-hmm. If they pay, 1 or 2 and inflation's at, we have to go with the CPI number of now 7.9. The real interest is a negative of whatever, -6. So there aren't anyone. The only people buying that debt right now is the Fed. And that's another, if you look at what Brazil did in the last year, they sold all their U.S. bonds and bought the Chinese yuan instead. This has been set up for years, because I think Russia has had their eye on Ukraine and China has had their eye on Taiwan, and they knew the playbook would be sanctions, because we did it in Iran, we did it in Cuba, we did it in Venezuela, and every single time there's always an end around. And it reminds me of a story of a man who's traveling on foot, and a robber says, give me your backpack. So he has to surrender the backpack because the robber has a gun and the man's on foot and doesn't have a gun. Then the robber says, okay, I got your backpack, give me your wallet. And this goes on to where he even gives the shirt off his back. And finally, the robber, again, it's coercive, he's got a gun, the man's unarmed, says, now give me your shoes. So reluctantly, he gives over the shoes. And then as the robber disappears in the sunset, the man, the victim, jumps up and down and says, alas, I've never felt so free, for these shoes have been aching my feet. And that's what I think of that story. I think of the sanctions, is the perpetrator at first thinks they're punishing the person that's receiving the sanctions. But because of the workaround, there's a lot of people that are upset with the United States. Is it because maybe we've overthrown governments via the CIA? I mean, count the coups that have happened all throughout Latin America, and we're still at war with dropping bombs all the time on Pakistan, Somalia, Yemen. I think we've been at constant war, and Lynette Zhang does a great job with a graph showing that even after, to finance Vietnam and Korea and Iraq and Afghanistan, we basically just had to print money to do so. Mm-hmm. And I don't think you can just fly troops over the Super Bowl like they do all the time and say, let's support the troops. while we're singing the Star Spangled Banner, I think people care more about their pocketbook and when they go to the grocery store or fill up their gas tanks than they do some of the old playbook. And patriotism is going to be diluted, and it already has been.
Mm-hmm. So, just going back to negative rates for a sec here, do you see institutional investors that are using that, traditional 60-40 debt equity split as being stuck between a rock and a hard place? And what do you think that they will start to see as a more lucrative opportunity?
Yeah, the 60-40 split, all it does is guarantee there's too much volatility in the market right now. So if you're an insurance company and you've been collecting premiums, you have to pay the benefit for a life insurance policy. Similarly, if you're a university, or let's say you're every single of the 50 states here have what's called, here in Colorado, we have the Public Employee Retirement Account. They call it PARA. So as these retirees retire, they're going to want to get paid. So the 60-40 formula is now expired, or there needs to be a new paradigm. And that's where precious metals sprinkled in your portfolio makes a lot of sense, at least to the tune of 10% or less. But right now, I believe they're at way under 1%. So this would be your sovereign wealth funds, your states. We're seeing a movement, legislation in Idaho and Oklahoma, where there's legislation saying we need to rotate into some silver and gold, public employee retirement accounts, life insurance. And David Morgan and I are working on a campaign, and I'll share the slide with you later, on working with some Native American tribes so they can have more control of their destiny and not be dependent on these financial instruments that are failing.
Mm-hmm. So do you see cryptos as another possible, let's say, exit or safe haven when governments get tyrannical and want to seize bank accounts and assets of those that disagree with them?
No, the problem with crypto, and we're seeing it every single day, you read about one of the cryptos being either seized, compromised, hacked. When we talk about war, there's a kinetic war happening. There's an information war. There's these financial wars, but there's cyber attacks. So why would you want to have a ledger like Bitcoin that's stored on the internet, knowing that the modern warfare is to use cyber attacks to bring down power grids? So when the lights go out, you don't have money? That's the riskiest thing I've ever heard of. Not to mention the fact that there's too many products. I can't keep track of, of course, the Bitcoin and Ethereum are 1 and 2, but look what Bitcoin's done since Thanksgiving. It was at 69,000, and I don't even look at it anymore, but it's probably around 35 to 40,000. It's way too volatile. It has not gone through one recession. And I think Gareth Soloway says it best. It reminds him of the .com bubble, where everybody was rushing out buying 500 domain names on GoDaddy. And I remember the Super Bowl where every single ad was, and you can do a Google search on how many of the 30 ads are still around during, pets.com, washmycar.com, And as it turns out, I think the philosophy of Bitcoin is good in being decentralized, but it's not decentralized. The government can switch on and off the internet. Look what happened recently in your home country of Canada when the peaceful protests of the truckers were rightfully so upset with the vaccine mandates, and their bank accounts were seized, their insurance policies are canceled. And, this was the biggest moment. I talked to some people that sell for mint state gold, that sell for a variety of the bullion dealers, and they said it was their busiest weeks. It was when Trudeau's friend, Chrystia Freeland, or Cynthia, I may have got it wrong, but
Krista Freeland.
when they mentioned that they were going to seize crypto and bank accounts, there was a run on the bank. And I don't think, we're going to see more of that. And I think crypto is extremely volatile.
So there's recently been a bill, too, that you had on your website, that the bill was introduced to the U.S. Senate that prohibits U.S. citizens from transacting in gold with members of the Russian Federation. So do you see this as a threat to gold and possibly for a broader application against its citizens?
I think that was, you're talking about the Stop Russian Gold Act, and I think that was introduced by a senator out of Texas. And obviously, I think it helped gold because the first thing, you can't censor or you can't sanction gold. And that was proven, a week later when Putin messaged that I'm going to formulate gold and denominate 5,000 rubles equaling a gram of gold. And since then, look at the price, the ruble's gone down. What is it now? It's pre-war levels. Mm-hmm. And at one point, I think the playbook was by having the price of gold less in Russia than it was at the COMEX, it would create an arbitrage. And
well, I think the issue with that, though, and I've had some discussions about this recently, is that the 5,000 ruble per gram deal, let's say, was only available to Russian domestic producers, and that has since expired too. So I don't know about the arbitrage opportunity because it was only really available to the Russian producers and banks that dealt with those producers.
Well, I would have no comment on, not my expertise is more in the area of a historical, anthropological, and I know one thing, that if you study the London Metal Exchange or the LBMA or the COMEX, that the rules are made up as they go along. And it's just something that earlier you asked me about the history of swapping, starting in Seville, Spain. We've seen this happen over and over and again. So I'm not too up to speed on the rules and regulations surrounding. All I know, it was a bad idea for a congressman, a member of Congress in the United States, to introduce a bill. I think it was called S3771, because there was some language in there that said basically, if you sell gold to a foreigner and they could then in some third party or unknowing way trade with someone out of Russia, I think the penalty was 20 years in prison and up to $1 million or both. Mm-hmm. So that put our friends at, whatever Silver Gold Bull or Bullion Max or Miles Franklin, or you name any of the bullion dealers, I think it's in a sense it's whispering like a gold confiscation act. And there was actually throughout history that's been very, very documented. And when we add slides to this presentation, you'll see in Athens, for instance, when they started debasing silver, they demanded that everybody turn in their silver. Turkey as recently as 3 months ago, asked everybody to turn in their gold. So I just don't understand I don't know I haven't followed the legislation yet to see if it's even made it to the House. It was just introduced in the Senate.
But isn't it that they didn't necessarily have to just turn it in, but actually they were paid at the time what was a quote unquote fair price for it?
In what country are you talking about?
Let's say the repatriation in the U.S., for example.
Yeah, in that case, it was the Gold Confiscation Act, from what I recall, under FDR, was mandatory. Mm-hmm. They didn't go door to door like the Gestapo, but people turned in their gold at a price that was in the mid-20s, I believe, and then the next week it was valued at north of 35.
Mm-hmm. So you also wrote an article entitled How to Win the Silver Argument Against Doubters, Haters, Spouses, and Friends. So walk us through your argument for silver as really an undervalued monetary metal.
Yeah, in that article, I was saying that throughout history, there's been different formulas to evaluate the gold to silver ratio. simplest one is just, if gold today is 1940 or 1950 and silver is around 25 to 30, that's around a 79 ratio. But the best charts are also to look at how much supply there is in the world, which is about 4.25 to 1. How much has been mined over time since the beginning of time? That ratio is 9 to 1. Current mining activity is 9 to 1. COMEX vault levels is at 10 to 1. So if you just take the average between supply in the world, mined over time, current mining activity, and what we see in the COMEX, you're looking at about, anywhere from 8 to 10 to 1. So I think it's fair to say, when was the last time silver was used and gold used as money? And the U.S. fixed it by statute at 15 to 1. So that's a good way to I don't know if you're going to win the argument, but there's times where my spouse will even question why I buy gold and silver. And all I say is simply, one day it's going to be wanted, and I'm just exchanging paper, fiat, and trading that in for a store of value in silver or gold. And I don't think it matters whether you buy silver or whether you buy gold. And some people like to buy a little land. Some people like to buy, real estate. I just think some of those expenditures are a little risky in volatile times. And I think even before the war in Ukraine, we've had some real volatile times for the last 10 years. And I think before this broadcast started, you and I talked a little bit about what happened perhaps with COVID and the origins of COVID. But that was sort of the 1-2 punch. If you take the lockdowns for 2 years, the supply chain disruptions, the price of oil will go to 200. The price of natural gas is going to go sky high. And the price of fertilizer is going to double again. There's nothing's coming. Look at used cars. They're at 41% year over year. You can't make these microchips that easily. I believe the iPhone's manufactured in 20 to 30 countries, even though it's made in China, all the parts together. So, I work every day in the field of supply chains, and there's no fixing this.
Mm-hmm. Yeah, we live in a volatile time for sure. Jon, of course, your website is the pickaxe.xyz, and you're on Twitter at the pickaxe_AG as well. I think that's a good spot to kind of wrap up our conversation for today. Is there anything else you'd like to add before we do?
No, I'm honored to be on the show. I'm a fan of the show, and I do want to supplement. We did have technical difficulties, so I want to supplement this audio only with some visuals so we can talk about ancient Greece and Rome and the manipulation in Seville, Spain, and the Bank of England, and just walk it all the way to the present with what's going on in Ukraine.
Absolutely.
And you'll see the common theme.
Mm-hmm. Absolutely. Jon, it was excellent to speak with you today, and I appreciate your time.
Yeah, likewise. It's been my honor, and we'll talk soon.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.